Good evening, everyone. Thank you so much for joining us this evening and coming all the way out to Bee Caves. I know it's quite a trek for some of you to get here, so we really appreciate your time. My name is Allison Silver. I'm the Director of Investments with Presario Ventures. I want to do a quick introduction to our team. We have Robin Massey, most of you have spoken with, coordinated our event this evening. She's our Director of Investments. In the back, we have Jamie Kingsley. She's our CFO, oversees all of our accounting. We have Darren Davis, one of our co-founders and principals at Presario Ventures, and Tom Burns, one of our co-founders and principals. So I'm going to turn it over to Tom. He's going to give you a little bit of a background and overview of what we're going to be hearing this evening, but would love to meet all of you if I haven't yet. So at the end, please come by and say hello.
All right, this is the best. And she did forget Brian Pattison, our analyst, but he gets treated like that when he's here too. So I'm really excited, and I fully expect if we did this again, once you all go out and talk to somebody, that we could probably fill up a meeting room in a hotel, because this is really important information. This is surprisingly good information, and information that a lot of us don't know. I've known of Damion for probably a couple of years. He wrote a book called EQRP, which he has kindly brought copies for everybody here. He won't take money for it. He'd just love for you to have the book because he's all about education. So I've known about Damion, and then I've known him personally for about a year, and I've been in this space a long time, and Damion started explaining some things that I could do, and I thought it sounded too good to be true, and I kind of moved forward with Damion. So what you're going to learn tonight are some things that I have done personally in my financial portfolio, and it's been fabulous. It's just fabulous. And I had it checked out with other people. I said, this sounds way too good to be true. And my overpriced accountant said, totally legal, totally the way to go. It's fine. So Damion's really knowledgeable in this arena. He knows exactly what he's doing. He's committed to doing this. He does just that. He does do a few other things, and I'll see if I can. Oh, there's me and Darren. And the rest of us. There's Brian, but we don't talk about him much because he's not here tonight. And this is not your typical education series, so I don't know what the slides are going to say, but we try to have something every so often for y'all that's for you. You know, our whole firm is built on education, and we figure if we can educate you, we can still educate ourselves, and all of us can move down the road in a little better way. Welcome, Brad. Damion is, as I said, Damion Lupo. He's our guest. He is a best-selling author. I have read his books. I've read his most recent book, which is called Unicornomics, which is really, if any of y'all own a business or want to start a business or want to fix a business, that thing is a short and sweet distillation of a lot of years and a lot of businesses, good and bad, right, Damion? That's where you learn. He runs the EQRP company, which is the title of that book. QRP, Qualified Retirement Plan, is that the correct acronym? He is a professional investor. He started buying houses at a young age. He did great until 2008, and then things took a little hiccup. Damion got out of that, so again, he's had his share of ups and downs, and we all learn from that. And so he is a wealth of information. I've seen him talk usually to groups of 500 people or more, and he's sought after. He's probably on the road 200 days a year because everybody wants Damion to talk. So he was kind enough to fly in from Arizona to come see us today. And again, I think if we ever have this again, we might fill a big room. So if you'll help me welcome Damion Lupo. Thank you. If you need it.
Perfect. Thanks, Tom. All right, guys. Well, thanks for coming out. You never know when people sign up. I went to one event, and there was like one person that was there, and had flown to DC, and I stood there, and I was thinking, this is a really good investment. So, but even if it was Tom and I, we just drink beer, so I'm sure it'd be fine. But thank you guys for being here. I think what we'll do is we'll do a little presentation, share some stuff, and then is there time for Q&A after that? Okay, cool. All right, so let's see if the next slide is the right one. Robin? It is. So you guys have a copy of this book, and I think there's probably some extras. If you have somebody you want to give a copy to, feel free to take an extra one. If you want a copy for somebody later, you can get another copy, as many copies as you want, and I'll mail it out to them at qrpbook.com. So just want to make sure you guys know that the resources are flowing like the beer. So 45 seconds is how long it takes for everything to change, your life, your investments. For me, an example of this is when I went to, or I had a guy call me and ask me if I wanted to go to Uganda. And he said, we're going to go hang out with the silverback gorillas. And I said, that sounds pretty cool. And I thought about it for about 8 seconds. And then I said, yes. So this is the alpha male. Anybody ever been to Uganda and not killed anything? So the reason I bring this up is it took a few seconds to do that. It's also the same amount of time that it takes to make a really good return if you make the right decision. So when you guys are investing, whether you're doing deals now or you're looking for investments, what's kind of an annual return that would be good, that you'd say, yeah, I'm interested in that deal? If Tom brought you a deal, what's the number? Are you hoping for anybody?
10, 12.
10, 12?
40%.
Okay. 40%. All right, so raise your hand if you would say yes to 200%. Is anybody not doing 200% when Tom calls you? All right, I don't know what that's about, but so that was a close-up because that was my favorite one. I just hung out with him for like an hour. But this is the other thing that's in Africa. You guys know what that is? It's gold. And it turns into that, which is really cool. So anybody know how much gold is right now? Because it's kind of had a bit of a run. Like 1,500 for an ounce. So I think, so you guys know what gold really looks like if you don't have any. This is a quarter-ounce eagle, so not quite that big, but does anybody want to give me $100 for this?
Quarter-ounce eagle?
Quarter-ounce gold eagle? $100 right now.
$100.
Here's the trade. You got $100?
My wallet's somewhere in my office.
So now we're doing due diligence. This is a process.
Yeah.
So, all right, get $100. Come on.
Hang on.
Come on. Somebody. $100.
Sure. I'll give you 110 here.
Inflation. It's now 200.
It's quarter-ounce.
Quarter ounce. All right. All right. So hold on a second.
seconds.
Hold on a second. So, if I offered you $300 for that right now, would you take it?
Yes.
Give me a hand. What just happened? What was the return? What was the return on what Darren just did? 200%. This is what most of you guys did. And then, kind of Darren, but the rest of y'all are kind of like looking and trying to figure out, is this real? What's the point? What are we doing? Are we going to talk about retirement accounts? And it's because there's something that's happened where most of us are trained to sit still, and it's because we're in a state of frozen. Can we pass out those straws real quick? The bag of straws that are there? No, the actual. So it's kind of funny. I'm going to give you guys a metal straw. I'm going to show you how to do something with it. I used to use plastic straws until an event in Dallas last year, and I had a girl in the audience put her arms across her chest, and she was looking at me, and then she put her hand up, and I said, yes, and she said, you're literally killing the oceans. And I was like, this is Texas, nobody cares. But I didn't really say that. But so we changed it, so now we have metal straws, so y'all can be like very Los Angeles-ese. Everybody's going to be happy. So you guys go ahead and take those out, because I'm going to teach you how to be ducks for a second. Take them out of the plastic case. What happened?
Plastic case.
Yeah, I know. The irony is not lost on me. So you guys get them all out. You know what though? It's one time, and then the rest of your life you can use the same straw.
One time use plastic bag.
I know. So I'm going to teach you how to use these things, and we're going to go into it. We're going to go through it. So everybody make sure that they're out. Here's the crazy part. The woman that said that a year ago was in Dallas with me yesterday. She walked up and she goes, I was the one that did that a year ago. I was like, what? She goes, I'm also a client now. I was like, you are? So apparently if you fix straws, you get clients. Who knew? I don't know. All right, so what we're going to do is I'm going to teach you how to breathe. So the first thing is I want to figure out if you guys know how to breathe already. So everybody take a deep breath in and hold it. And then let it out. All right, so basically most of y'all did was this. And it was all up here. and it was a huge fight or flight. It's called the sympathetic space. It's where we tend to sit. It's why most people were frozen. It's why we miss deals that are 200% in 45 seconds. The other place to be is where we're in a parasympathetic state, which is the rest and relaxation state. And I'm going to teach you how to get there with this straw. You guys cool? All right. Anybody not willing to play? This is going to be fun. All right. So everybody put your hand on your chest, put the straw in your mouth, and we're going to breathe into your stomach, and you're going to look kind of like Buddha. You're going to breathe in and stick your stomach out and keep your chest down. So I want you to breathe in and hold it there. And then keep your stomach out and breathe out through the straw. And then breathe in to your stomach. And then out through the straw. You guys can go ahead and put the straws down. Do you notice just a slight shift in the energy of the room? If you look at your straw, there's a message on there. Power is in the presence. And so the idea behind that is that if you can get present, you've got all the power in the world to make 200% in 45 seconds. And I'm going to give you some tools that you can use this with. You can also use this anywhere, anytime. So just keep your straw with you. This is normally what we're afraid of. It's because we're trained to be afraid of the boogeyman. And unfortunately, it's from childhood. This is what we really should be afraid of. Right? Bad tattoos. In Austin, bad tattoos, right? So the reason I bring this up is because about 5 years ago, I was having a conversation with my dad, and he had been diagnosed with stage 4 cancer. And we were sitting there, and it was like the last few weeks, and he looked at me and he said, you know, there were so many things that I wanted to do. And he literally had the regret tattoo on his soul. And it kind of crushed me, and I thought, well, this is terrible. I don't ever want to do this. Maybe I can do something about that for my own life. And so I said, all right, how am I going to change so that I never do this? Well, it was about focusing on this. Who's ever read Malcolm Gladwell's books? You know what this number is from? The number of hours for mastery. So there's two things that I've spent 10,000 plus hours, and Tom's number with real estate and investments is probably 50,000 hours. There's a reason he's so good at what he does, and same with Darren and his team. So one of the things that I've spent 10,000 hours with is this. And so if you can imagine, like, there's music going on right now, but there's no music, so we're just going to pretend there's music. This is actually in Austin. I trained for a number of years, and this was one of my black belt tests. And the reason I bring it up is because it's something that kind of looks easy if you do it long enough. And I spent 20 years doing this to make it look easy and throw people around until I actually threw a guy into my face and broke my cheek. That was the edited part, so you don't get to see that. This was the other thing that I spent a lot of hours doing. And this was what Tom alluded to, or he mentioned when I built up my portfolio. And it started with charging a house on a credit card, which is a really dumb idea. But I did that, and then it snowballed into this, which was really cool, and it led to that. You guys ever seen Bad Boys 2 with Will Smith? There's like the trequel or trilogy coming out now. I bought that car because it was Will Smith's car, and I wanted to be Will Smith. So that was cool until 2008. And 2008 was when 20 million went to negative 5 million. And so I went, this sucks, because my entire balance sheet was gone, and that's who I was. And a lot of you are doing investing for different reasons. Some of you may be doing it for just the money. And the problem with that is if that ever shifts, you really don't have anything left. And that's where I was at. I didn't really have anything left. So I sat there, and then my dad got sick, and he died, and I'm thinking, okay, there's got to be something different. And that was a different why. There's got to be a driving force that's beyond just the money, because the money has to end up being a side effect. That's what it is now. The work that I'm doing and what I'm going to teach you about with the retirement stuff is about breaking shackles, because every one of us has some type of shackle, and the reality is the shackle is self-imposed. It's something that we're putting on ourselves. And that's where this guy comes in. Do y'all know that that's the approximate number that most people pay in their lifetime? Out of their wealth, what they make, that's what they're giving away, 70%. This is a better number. We're going to teach you how to get to zero. So if we're going to do that, we've got to think differently. What we're going to do is break a little conventional wisdom. And we're going to do that by thinking about investing differently. And if we're going to invest differently, we might need some new tools. The tool we're going to talk about is the EQRP. This is a registered trademark process. It's a unique product that we've created. It's the Enhanced Qualified Retirement Plan. And it also, the E is also not just for enhanced, but it's for energy. So has anybody ever read David Hawkins' Power versus Force? Okay, it's one of the best books that I've ever read in my life, of thousands of books. It's incredible. And one of the things about the energy is the words and the emotions have different energy. And so when you think about retirement accounts, we've got like IRAs, 401ks, and then the Wall Street stuff. And all this stuff down here, if you think about how people respond to these or how they describe them, there's a lot of blaming, like the stock market is down because Trump tweeted, or the stock market is up because Trump tweeted, or like whatever. And then you've got people justifying why they're broke or why things aren't happening. These are very low energy. And the last one is really just the big being a victim. Like my financial advisor did this to me, or the stock market is down and therefore I'm broke. There's another place, and it's a higher energy, and it's where the EQRP lives. And the reason I put it here is because it's all about being self-responsible. It's where you have control. I'm going to share with you how you have total responsibility and control of that space, that money. When you shift the energy, everything else kind of opens up. If you're in the wrong energy, this is why people are miserable with their retirement accounts most of the time, because they don't have control and it's very low energy. So the EQRP is really the Ferrari of 401ks. There's a bit of a Ferrari theme because I had that, I got it out of my system, but it still finds its way onto the slides. So just what it is. This is why. There's $29 trillion sitting in these accounts. So some of this is in your accounts, some of it's in other people's accounts. The reality is that you've got a lot of people you know that have part of this, and that may be their biggest chunk. So if this works for you, that's great. If it doesn't, it's going to work. It's going to be some information that you're going to want to share with other people because you can change their lives. Biggest question, and Tom probably can tell you his own story, but I mean, you've been doing this a long time and you'd never heard of this.
Right.
This is all new. Why haven't you heard of it? Because Leonardo DiCaprio told you it's better to give him your money. It's because Wall Street is all about fees and control of your money. And it's really, I don't think, it's my opinion, that it's not really in your best interest to hand it to somebody that's just there for fees. They're not really in alignment with you. And I think most of the system is like that. They're not in alignment. Groups like this with Presario are all about alignment. It's totally different when you're connected and there's a relationship. So the EQRP it's a checkbook retirement account where you have your money and there's a team behind it. So there's a team there. It's not some app that you're just, like you're hopeful that maybe it'll work out. There's actually human beings that are a part of this. So when you do something like this, with any investment, it's not a one-man band. It's all about engaging people. It's about having people as a part of your thing because you do better together. It's about having speed. So there are a lot of deals. I mean, how often have you had people that called you and said, I want in on the deal, and it's too late, it's closed?
Plenty of times.
It's the same thing when people are wanting to invest with slower vehicles like IRAs. They want to do a deal, and it takes them a month to get their money, and the deal is gone. Like Tom isn't going to wait a month. You might have hours, so you've got to be able to perform. The EQRP gives you the ability to fund in hours, not days or weeks. You don't have endless transaction fees. That's a big part of the entire industry, and it serves the industry really well. You've got lawsuit protection and an anonymity. This is the United States of lawsuit. Like that's how people make a lot of money these days, unfortunately, and when you have money, you tend to be a target. This protects that. There's a $50,000 credit line, which is kind of nice. I'll go into why that's really nice in a minute. And then you can use debt. So this is one of the biggest things that most people don't know, and it's a ticking time bomb. And we're going to get into exactly what happens, but if you use an IRA and there's debt, you're basically setting yourself up to get crucified. It's terrible. You can do almost anything in this. So typically 401ks are set up where you get mutual funds, stocks, bonds, you get like 5 options. Most retirement accounts, it's all paper. With the EQRP, with this type of account, you've got this tax sheltered account with all this money, and you can buy almost anything you can imagine. Real estate, global stuff. We have people buying coffee farms and chocolate in Belize and Panama. You can be the bank. It's better to be the bank than borrow from the bank. You can buy real gold. So Darren wants to buy more gold, or whoever ended up with the gold. I don't know how y'all did your syndication there, but you can buy physical gold and keep it. You can't do that with an IRA. And that, in my opinion, is one of the smartest things that everybody can do, is have some type of hedge in gold. And if you can use pre-tax dollars to buy gold, the US government just gave you 30% of your purchase. That's a really cool subsidy. Like, I'm in on that one. Things you can't do: you can't invest with anybody up or down, kids or parents. You can't invest in property. You can't go buy a lake house and then use it. Collectibles, like wine, is probably smart because you'd end up drinking your retirement. Property you actively manage. You can't go out there, and if you're into property and you're doing something yourself, you couldn't go out there and start replacing the roof yourself. So it's meant to be passive, and any company you own more than 50% of, you couldn't invest in. Let's talk specifically about this, because most people, if anything, have a self-directed IRA if they're doing any type of self-control activity or self-directed. The difference between these two is that self-directed IRAs are slow. There's limited amounts. Like, imagine if you put everything you could into an IRA for 20 years and it was about $6,000. You're not rich, you're just old, right? Like $100,000, what are you gonna do? You can't do the Roth. Who knows what a Roth option is? Anybody not know what a Roth is? So in the mid-90s, remember, you guys remember the budget surplus when Congress was congratulating themselves that they had excess? Y'all remember this? Clinton administration, the whole thing? There was a reason that happened. It was because they brought the Roth into existence. When the Roth happened, people shifted assets from pre-tax to Roth. They paid taxes then instead of paying them 20 or 30 years down the road, and it created a surge into the federal treasury. Guess what is not going to be there in 20 or 30 years? All that taxable income. So they screwed the future generation, but it created a surplus. Everybody's happy in DC. The Roth is probably the most powerful weapon for eliminating taxes and going to zero that exists in the tax code. With an EQRP, you can use it. With an IRA, it exempts out. You get disqualified if you make too much income. So we like the EQRP a lot more. You can put 10 times as much money into it. You can have unlimited debt. And in real estate, it's all about the debt. I mean, that's why we like real estate. So anybody recognize this? This is a deal. This is a real deal. This is a property that I passed on the way from downtown today. This is a syndication type of deal, and I'm going to give you real numbers and show you the consequences of using the wrong vehicle. So rough numbers, it's about a $55 million build, say $11 million in cash, and $44 million in debt. On deals with HUD, you can do 80, 85% debt, so we just picked 80. So 5 years later, let's say there's about 5.5, and that's a rough, I guessed on it. The big thing is the 90 million that we're going to say that's worth about 90 million. Interesting, but not really a big deal yet. That's a good number. 35 million in profit if it sells. That's the problem. If all that money, the 11 million, came from IRAs, this thing called UDFI, all those IRA investors get a tax bill for $9.8 million in a tax shelter. Do you know who's pissed off right now if that thing sells? IRA investors, and that's what most people are using. If they actually used an EQRP, there's no tax. It's 37% tax on the leveraged profit. It's literally like the highest tax rate in the code. I don't think there's anything higher. That's the difference, 25 million versus 35 million. It's a total giveaway, and a lot of people don't realize that they're sitting on a grenade with the pin out. They don't have a clue. So if you have those conversations randomly with people and they mention real estate or an IRA, you might become their best friend if you shared this little bit of advice or information. 9.8 million bucks. It's a lot of wasted money to the government when you can go to zero. Another really simple example, this is actually a client that came to me and they heard me speak and they said, we've got a house we built or we bought, we fixed up, 150, 50, they sold it for 300. So after their expenses, they had a net profit of 58,000. Problem is they had purchased it with their IRA. And this is what happened. There's a $20,000 tax bill. What we did is we converted the asset from the IRA into an EQRP. When we did that, it became exempt. They closed a couple weeks later and they kept the 58,000 bucks. It was one decision. It took about 45 seconds, and they made $20,000. It's literally just having better information. Who knows who Tom Wheelwright is? The tax accountant, rich dad advisor. He says, if you want to change your taxes, change your facts, you've got to change your facts in this space because there's a better way to do things than most people are even told. Bottom line is EQRP is exempt from UDFI, which is unrelated debt financing.
Unrelated debt finance income.
Boom. There we go. So it's exempt. Exempt is better than triggering it. So people ask, well, what do we do? We're already in a deal. A lot of deals and syndications are closing. They're selling now, and this is where it gets real, where there's a real problem. If somebody's already in a deal, it's called an in-kind rollover, where we move the asset. We literally pick Westlake Medical Center and we move it over to the EQRP. Boom, $9.8 million is kept by the investor and doesn't go to the Treasury. So one of the biggest problems people have is they opt themselves out. They say, I'm not qualified. People that are qualified are people that are putting deals together, people that are self-employed, investors, W-2 employees. If you have employees, you're eligible. And the bottom under Presario is your relatives, your mom, your grandma, your kids. Like anybody can qualify for this. There is no limitation. Basically, anybody that has a business, who's ever been on eBay. Every one of those stores is a business. If you had a business on eBay, you literally could sell your old shoes on eBay and now you have a business. So it doesn't take a lot. People just think, well, I'm a W-2 and I'm stuck. A lot of doctors do that. They're like, well, I'm just toast. I've got a simple or a SEP IRA and can't do anything. Yes, you can. So this is eligible for anybody that actually wanted to do it. One of the neat things about the tax code that changed in 2017 and went into force last year was the tax brackets changed. So the bottom tax bracket is $0 to $12,000. And that means that anybody that makes $12,000 is not going to pay any taxes, no federal income taxes. Who has kids? Okay. One of the coolest things that you can do is pay kids because you're going to pay for them anyway. Like you're going to keep paying probably indefinitely, but you can pay them as employees and the first $12,000 that they make is tax-free. You get $12,000 written off against your actual income. So it doesn't mean go make kids to get deductions, but it does mean that if you have them, you could do this. Now that they have earned income, they could potentially go and put that into an EQRP, and it could be a Roth contribution. Roth is our friend. It's our best friend. It means no taxes ever. And then down the road, that contribution could be taken out. It can be taken out tax-free, penalty-free, anytime they want, college, anything else. So it's a way to start moving money around. It's just, you're going to spend the $12,000 on the kid. This way you can maneuver it. Even if you don't use an EQRP, it's just a way to reduce your tax burden. And then, you look at your kids a little bit with a bigger smile. And if they don't know how to do anything else, they can stand in front of a camera. That's me, JCPenney, 1984. And seriously, like if you have a 3-year-old, you could actually do this because child models are paid pretty well, even at JCPenney. Getting money into an EQRP is done 2 ways. 1, rollovers, old accounts that you have, and then 2, new contributions. It'll take almost anything. IRAs, 401ks, government thrift savings plans, 457s, anything that you want other than a Roth IRA. That one's just stuck. But anything else can get rolled over, and it's unlimited. The contributions, you can put $56,000 in there a year. It goes up to $62,000 if you're over 50, and if you have 2 people, that's over $120,000 a year. It can be deferred or Roth or a combo, and there's no income limit. If you make $300,000 or $400,000 or $500,000 or $1 million, you can still use this. There's no block. You're not going to get stuck. And there are some ways to do this if any of you are real estate professionals, where you can literally get money into Roth, not pay taxes getting it there, and then literally that money grows tax-free. So you're never paying taxes on this stuff. It's kind of an advanced strategy, but it's the best strategy that's out there in the code, in my opinion. So we talked about the credit line, this $50,000 credit line that's in place. And at one point, you guys know what a black card is? Black American Express? It's the one that like Kardashians have and all that stuff. It's because you have a spending problem, right? Like they invite you, they're like, you are really good at swiping. And so in the mid-2000s, I called them and I said, is it possible for me to get one? And they said, yes, you definitely spend enough. And I was like, well, I'm curious, what's the number? And they said at the time it was like $1 million a year. So apparently I had a really good spending problem, and I thought it'd be cool to be able to buy a Ferrari on a card. The Ferrari dealership doesn't do that because they don't want to spend like $10,000 in fees, but that was my idea. So I go into Costco, and this is what I was going to buy. You guys been to Costco or Sam's Club? And this is how the toilet paper comes. So I had one of these things in 2008, and I went to check out with my giant vat of toilet paper, and I go to swipe, and then Costco only took American Express. So I had my black card. It's an unlimited limit. Like, you can spend whatever you want. And they said, declined. I was like, that's not right. So I did it again, and they're like, sir, it's still the same answer. I'm like, that's not possible. I can buy anything I want. They're like, you can't buy toilet paper. Like, I was like, oh, crap. Or not. And so I called American Express, and I was like, hey, what's going on? And at the time, my ego was bigger than my card. Like, it was massive. And I was like, this is bullshit. What is going on? And they said, sir, your current balance is $11,000. And I said, I have an unlimited limit. And they go, no, sir, you don't. And I said, what do you mean? They said, your limit is $11,000. And I said, what did I spend last month? And they said, like $150. I go, how is this possible? They go, you are at credit risk now, because I was in the wrong industry. So my limit became my balance, and I couldn't get my damn toilet paper or gas or anything else. The reason this is important is because when credit markets cycle, or if you're leveraging credit lines at institutions and you need money, there's a $50,000 built-in credit line inside of an EQRP where you could write yourself a check. If I had this then, I could have actually got my damn toilet paper. So it's kind of useful when you need it. Banks don't want to give you money when you need it. They give it to you when you don't need it. It's kind of how that works. Anybody speak Portuguese? Or Spanish? Yes. So cheap objects can be expensive. Basically what this means is that life is too short to argue with stupid people. And that's where most people get their advice. That's not what's happening here, because this is, well, I mean, let's be honest. That's why y'all are hanging out with him. Because there's experience. When you go through cycles, when you've done things, we've got war stories. We could spend weeks talking about all the war stories. Talking about things, everything from restaurants to real estate that has salamanders. Like, there's everything out there. You want to listen to people that aren't full of garbage. One of the things that I did after I lost all that money and like my identity was I started writing my rules down. Does anybody have rules for business and investing on paper? All right. The reason that we do this is to protect ourselves from us. Like, our egos will get all fidgety, and the emotion and the glands start making decisions. So in 2008 or 2018, I updated this. I'd been doing it for a few years. And 3 of these most important ones are the people I don't hang out, I don't work with, I don't invest with, not self-responsible people. Like, people that are focusing down here, I'm out. Self-responsible, I'm in. I won't invest more than 5%. So in 2006, I had 7 different deals that were netting, in my mind and on the pro forma, $1 million a piece. 12 months later, I lost over $1 million in every one of them. I was 100% wrong on all of them in the opposite direction. So, and they were leveraged. So clearly I had no rule about 5% because I was toast. And then the last one is places. So I don't know if this is going to happen very often here, but there are places where this is important. In Memphis, for example, I invested in a multi-unit, and it was next to Elvis's house. I was thinking that was pretty safe. I didn't know about Elvis's house in Whitehaven. It's not so safe. So I was building this thing, remodeling this apartment, and I get a call, and they said, we got a problem. I said, okay, what's the problem? Because I wasn't living there. I was off-site in a different state. They said, your copper's gone. I said, well, which copper? They said, all of it. I was like, what do you mean all of it? They go, somebody came in and tore it out of every wall, out of every piece of concrete. It's gone, 119 units. There is no more copper. I was like, how did that not get noticed? But it was gone. So about 10 months later, I get a check from Lloyd's of London, who, if you ever can avoid them, please do. It was a mess for about 30 cents on the dollar. And I thought, okay, well, I learned my lesson. I'm not going to do that if I can help it again. And guess what call I got a month later? Yeah. We got a problem. No. Yes, your copper is gone again. And I'm thinking, I had an armed guard there. Like, what's going on? They're like, we got another problem. I said, what is that problem? I mean, this is pretty bad. they killed your guard. You have no idea the weight that is on you when somebody dies on your project. The reason that I don't invest in those type of projects anymore is because I don't want that call. It could happen anywhere, but it's more likely in a place where you have bangers and you have all this stuff going on, and that's where I was investing because I thought the numbers look good. No number is good if somebody dies. So that rule is to protect me from really juicy returns in the wrong place. This is the biggest concern that people have in general. Some of you, it may be the biggest concern. When my dad got sick, one of the things that became really obvious is he was concerned that he was going to run out of money. And I think he checked out because he didn't want to be a burden. I think he had 6 months more that he would have been around if he had resources. But he followed the system and he did all this nonsense and it left him basically broke. And so he said, okay, I don't want to put that on my kids. And so he was gone. This is a big thing that we can have an impact on both in our own lives and other people's lives so that we can go into that space. Don't breathe like that, but being more of a superhero to people, help them with and give them more time. It's going to give you the ability to have more time with people, and it'll also just help people that you care about have more time with their families. This is what we don't want. This is the big problem. It's the regrets. If you guys want more information, if I can do anything for you, please reach out and let Tom know. And whatever I can do, if I can help you with this stuff or anything else, tell you what other rules I have so you don't have dead people on your watch, like whatever I can do. I'm doing what I'm doing to break financial shackles and to empower you guys so you're not stuck. It's 1 million people. That's the mission. That's why I'm bouncing all over. It's why I flew over here. I mean, I love Tom, but there's a bigger mission. It's not just because I want to hang out. Like I'm doing this on purpose. So that's what I had to share. I will hang out obviously all night. So if you guys have any questions, I'm happy to answer them. But thank you for your presence and your focus and for being here.
Thank you.
So how do you move?
Yeah, let's go, Paul.
Yeah, that's the question. How do I move my stuff from the self-directed to this vehicle, and then also where is this vehicle? Is this is this an institution? Is this how's it done?
Good question. So how you move assets? So my company, EQRP company, sets up an EQRP. It's effectively the big part of it is a trust, and you're the trustee. So what that means is that you control everything. Once it's set up, you're going to direct through the documents. You're going to direct the custodian to transfer. It's called an in-kind rollover. They're going to transfer the assets from their custodianship to yours as trustee. It's basically a letter. One letter takes all the tax away from leveraged stuff. They transfer the ownership to your new plan that we set up, and at that point, you're controlling it. The cash that's involved is going to be sitting in a bank account that you're the signer on. So there's no institution, there's just a bank, and you're the signer. So it's total control. There's nobody else getting in the way. I mean, ask Tom. He's got the steering wheel and he's driving. Yes.
If there are no transaction fees, how does your company benefit?
So transactions when you're investing. So we charge a setup and we charge an annual, and they're both flat. But when you're doing a lot of transactions, I've seen people pay $4,000 or $5,000, $10,000 a year in IRA fees. But that's not even the biggest thing. It's the UBIT tax. So, but it's very transparent.
If you transfer a Roth IRA, does it maintain the tax advantage of it?
I wish you could transfer a Roth IRA. Unfortunately, that's the one thing, for whatever reason, in their infinite wisdom, the IRS has said it's not allowed to transfer. So you're stuck with that Roth IRA.
So if it's a qualified plans have a lot of rules and regulations about other employees. So how does this, if you're an employer, relate from a qualified, and meet statute?
So if you're an employer, you can have a plan that's set up that gives the employees the same options to do what they're already doing inside of a 401k, and then there's self-directed options inside of that. So the way the plan is built is crucial in what is allowed to be invested in. And then the oversight that you have is either you as a trustee, or you could have somebody else that's monitoring the assets. It's built so that you have options outside of what they typically give you. So there are responsibilities, and the question is, if you've got employees, do you want to have them yourself or other people? And you've got a lot of options and choices to do that. That makes sense? Do you have a follow-up?
Yeah, is it mandatory that there's, many of these other plans require whatever you match for yourself,
Yeah.
there's some contribution to those employees?
Okay, so that's a great question. So in terms of, it's called safe harbor rules. Basically, if you've got employees, you've got to make sure that you're not discriminating against them. You've got to give them certain matching numbers if you're going to match. So for contributions, all the same rules apply. So there's no difference here. Sir?
Are your setup and annual costs asset-based or are they fixed?
That's a great question because I personally hate the whole AUM in this space. AUM is assets under management percentage. We don't do assets under management. Its setup is 2,600 and the annual is 399. Doesn't matter how many employees, doesn't matter how many assets, doesn't matter how many transactions.
So it doesn't matter dollar amount rolling in or
You
saying.
have $8 billion going in, it's the same fee. Fixed. Yes.
Damion, what's the on the 56,000? Is that an IRS guideline? Because that's pretty high. The SEP is up there, but the others are very limited. And for higher net worth accredited people, it's really hard to get in that space. So, how does that? Where does that come from?
So the 56,000 is based on the 401 section of the code. It's the maximum number you can put in for a qualified plan amongst all qualified plans you may have, because you can have multiple plans. It's just it's an aggregate 56,000 per year that you can contribute, and there's a formula based on your income.
Amy, can you have a traditional 401k and a solo 401k?
Yeah, so the good question. You can have multiple plans. So if you already have a 401k, you can also have one of these plans. And there are rules around ownership of businesses. Bottom line is many of our clients have 401ks for their businesses. They have 401ks that they're an employee for, and they'll also have an EQRP. And so you can move money between the two. Like there's a lot of different options that nobody's really going to tell you because why? There's no benefit to them. So this is just really you getting control. I mean, nobody's going to say, yeah, this is a good idea. Take all your money away from us so we can't charge you fees anymore. It's a terrible plan for them.
So some of these state teacher funds, like my mom has a 403B, so it's been sitting there making nothing for years. So that could transfer over to this, and then walk me through the tax consequences from transferring it from her 403B to this EQRP, and then what happens as she starts investing and starts with that bucket of money and starts making profits on that.
That's what happens when she transfers the funds over.
Okay, so that's transaction one.
Transfer. When she starts making money inside and it's doing what it's doing.
Okay, keep going. You need a third one.
The third one, when she actually starts spending the money, that's the normal distribution. So that's whatever her tax bracket is.
So whatever that money comes out of that.
When she's spending it on life,
Okay.
that's, if she's got some free time and she becomes a real estate professional, she goes buys a piece of land or buys, not land, property and uses depreciation. That depreciation, that phantom expense could offset all of these distributions coming out.
So you could offset that with all the cost segregations and bonus depreciations and all that.
Get mom in a deal. I mean, that's why the code is so, it was literally written for real estate investors and business owners, but the real estate investors, why? The president's a freaking real estate guy. It was written for us. You can go to zero. This can be zero. Every one of you, if you're paying taxes going forward, you're making a mistake. It's a choice. It's literally a choice now because of the code. And you can set yourself up. We didn't really dig into it a lot, but the Roth piece, once money's in a Roth, do you guys know how much Mitt Romney has in his Roth account? Over $100 million. He's also a U.S. Senator. Do you think Mitt is going to screw Mitt? Mitt is going to make sure that the Roth stays in place. Roth, once you have money in there, it's never going to be taxed again. And you can bequeath it. I did this with my dad. So when I talk about grandma, literally you could set things up for folks in your family. I set an account for my dad up, a Roth account, 15 years ago. And I hired him to be the chairman. I flew him to Austin to have a meeting with me and then paid him, and he put it in the account. And then when he died, I inherited it. So I'll never pay taxes again, and I can spend the money too. This is an option for everybody. Everybody should have Roth accounts. There's no reason to not. You can inherit a Roth, yeah.
Really?
See, Tom's learning something new today too. Yep.
But if you convert from your self-directed IRA today to a Roth, you're going to pay whatever taxes.
So great question. So you've got your money, your IRA. Traditional. And this can move over to the EQRP, and then you can convert it to a Roth inside the EQRP. When you do that, let's say it's $100,000 that moves over, it's $100,000 that's added to your adjusted gross income. To offset that, cost seg, bonus depreciation, all those things, get $100,000 in phantom expenses, zero, and you've now got Roth money. You can convert it all. And then that Roth eventually goes to somebody in your family. You could spend the next 70, 80, 100 years not paying taxes in your family because of this one thing right now.
Can you draw where the trust, the structure, where the trust sits in this?
It is the EQRP. Yeah, it's a trust. That's why you're the trustee of the EQRP. So, any other questions?
What you just described, is that in the book that's sitting just here by?
A lot of it is. Yeah, some of this stuff some of these strategies are not in the book that we've just chewed on and talked with a lot of really high-powered accountants and thought through these things and realized there's no reason to pay taxes anymore. And so it's not in the book because I'm not going to give tax advice. What's in there is IRS code that's cited in a readable way. But giving strategy, that's a team effort. And this is just like a little bit of a tease for y'all to make sure that you're not writing tax checks anymore. So, but there's a lot of juice in there. Or it might put you to sleep. I don't know. Depends. I get excited. I wake up at 3 a.m. and I'm reading IRS code because. Yes.
What IRS code were you reading? Like specifically?
I was a lot. I mean, everything that goes in there.
No, but like, I want a source that I can go look at.
The IRS.gov.
Right, but
Yeah, but this much, narrow it down a little
yeah,
bit.
like
So usually what I'll do is if I have a question, I'm thinking about something, I wake up and then I'll Google it and it sends me to a certain spot. So whatever I'm thinking about is going there. That's changing all the time. It's not like I was thinking about one thing for the last year and I can tell you.
sure, but say I want to know more about the EQRP and the tax code. Just
It won't have that expression.
It's not going to have the EQRP. It's going to be under the 401 section. So just go to the 401. IRAs are under 408. So you can see if you dig, and it's buried under 401, there's the leveraged debt exemption. And so you'll find these things. This is, I mean, it's crazy how much information is there, but it's all there. It's just not digestible, but it's all sitting there. So,
Arcane.
yeah.
So,
Yeah.
look for the leverage debt exemption.
Yep. It's levered right now. There's an exemption. Right. Yes. Right.
As far as the strategies for implementing some of these more advanced tactics, is that like a separate service that you provide through your firm, or is that part of being a client?
It's just being a client. We just talk about that stuff because the role we have as your team building this stuff, we never touch money. So we're not financial advisors. We're not saying, oh, you should buy this or that. We're just literally saying, here are the different things you can do. Now get your attorney and your accountant involved in this conversation and validate and verify. So I just share whatever I learn, and so does the team.
So since it's in the 401 section, is it still subject to 25% of AGI?
Yes. Yeah, so the maximum that you can put in, the $56,000, is a combination of two things. It's an elective deferral, which is up to $19,000, plus 25% of your income based on wages. So there's a formula for the contributions. Same formula as a 401k. Yes.
Does it have the same annual reporting as like the self-directed, where the investment has to report what it's worth every year?
So there's two things that all plans have to have. They have to have fair market valuations for all the assets, and then there's a reporting of some sort. So in an EQRP, it's the 5500 form, which is on every type of 401 plan, and so that you can do it, we can do it for you, or an accountant can do it. It's for most people, it's fairly simple, and they could do it. We charge a few $100 if somebody wants us to do it, but there is a reporting because your assets are off book. Like if you think about real estate or gold, the IRS has no idea where this stuff is. They can easily look at a brokerage company because they can do an audit and match, but they're going to look at that stuff.
Are you a custodian, or your firm a custodian in any way, shape, or form? No, the trust is the custodian.
The trust has a trustee, and the trustee has the fiduciary responsibility to protect assets. So at no point does anybody touch your stuff except for you. Anybody else? Yes.
significant real estate inside of it's a limited partnership with multiple partners? Is there a place for that?
If the ownership of your partnership interest is owned by an IRA, then this would make sense. If it's outside of a retirement account, you can't put an asset into the retirement account.
Damion, I know one of the questions we're going to get, because Tom and I have been personally doing this, and we've got half this room has probably used their IRAs in some form or fashion for investments. But the people that have been in self-directed IRAs for the last 15 years that are already heavily invested into real estate, I mean, I don't want to create a bunch of chaos with the question, but is there a way to seamlessly or with a little effort to transfer from a self-directed over to this to avoid the potential tax issue you started out with?
Yeah, so the transfer, assets that are in IRAs, they have got to get out of the IRA unless it's Roth, then it's just stuck. But moving those assets that are already invested is simply a function of a rollover form. Once an EQRP is set up, it goes to the custodian.
So give you an example. I have 2% as an LP in this real estate deal. I'm going to put it on that form and transfer that 2%.
So two things are going to happen. You're going to send the form to the custodian. The custodian is going to send you a letter to you as the trustee. They're going to say, we're transferring custodianship to you. You're going to take that new letter, that information, and you're going to give it to the sponsor. And you're going to say, please retitle my assets. Once that happens, you're exempt. That's it.
So I did it.
Oh, you did it?
Yep.
I haven't talked to you in a couple months. I know. You're supposed to share that with me.
45 seconds.
There you go. I just learned it. How true. Well, guys, I want to tell you, let's give Damion a big round of applause. This is good stuff. Yeah. Man, thank you very much. That's good. That is so good. I'm going to tell you, stay here just for a second, because I kind of have prided myself for the last 15 or 20 years finding those little niche things that can make my returns better and make it, effortlessly to grow my portfolio. In 2000, if you remember the crash in 2001-ish, 2-ish, with the tech crash, I was right in the middle of San Francisco, kind of like you. I was all in on Yahoo.com, and it was at 252. The next thing I know, it was at 27. My strike price was at 230, and I was never going to see a dime of that. So it was pretty disheartening. But what I did is I started killing all my IRAs. I mean, my 401ks. I said, I am not beholden to the government anymore. Got into the self-directed IRA, then found out how hard those were to manage. It was a complete nightmare. I missed out on multiple investments. I had multiple paperwork, and I like what you're doing here. This is good stuff. So thank you. This is all about the education, guys. I mean, I learned 2 or 3 things here tonight, and I live this stuff every day. I learned 4 things. I learned that Tom's already done it. Yeah, so hadn't shared that with me yet. But no, thank you very much. Appreciate it very much.